The manufacturing industry in 2025 is facing an evolving insurance landscape, with rising costs, specialized coverage needs, and the growing role of technology shaping how companies manage risk. With everything from supply chain disruptions to equipment failures, manufacturers must stay ahead of emerging insurance trends to protect their businesses. So what's changing in the manufacturing insurance market, and how can businesses adapt? Let's break it down. Specialized coverage for manufacturers. Manufacturing operations vary widely, and insurers are moving away from one-size-fits-all policies. Instead, they're offering industry-specific insurance programs tailored to different types of manufacturing risks. For example, the risks faced by metal fabrication plants, food processors, or electronic manufacturers are very different from those in plastics, automotive, or printing. To meet these diverse needs, insurers are focusing on general liability insurance to cover product defects and workplace injuries, workers' compensation programs with flexible deductible options, business interruption insurance to mitigate supply chain delays, equipment breakdown coverage for machinery, robotics, and electrical systems. This sector-focused approach helps manufacturers secure more precise coverage, ensuring they're protected from the risks most relevant to their operations. Rising insurance costs and market challenges. Despite improved customization and coverage, insurance costs for manufacturers continue to rise due to a combination of inflation, supply chain risks, and rising litigation costs. Key factors driving these price increases include higher repair and replacement costs for manufacturing equipment, supply chain volatility, increasing risks of business interruptions, more complex liability risks, especially in highly regulated industries, rising product recall incidents, which are leading to increased claims. For manufacturers, this means that strong risk management strategies and proactive safety programs are becoming more important than ever. Companies that can demonstrate effective loss prevention measures may be able to negotiate better insurance rates. The role of digital transformation in manufacturing insurance is becoming increasingly significant. Another major trend shaping manufacturing insurance is the rise of AI-driven analytics and predictive monitoring. Insurers are increasingly using technology to assess risk based on real-time production data and operational monitoring. AI-powered risk assessments analyze machine performance, detecting early signs of potential failures. IoT sensors and automation tools help insurers evaluate safety measures in factories. Predictive maintenance programs reduce the risk of equipment breakdowns, leading to lower claims. For manufacturers that invest in smart risk management technology, insurers may offer reduced premiums as an incentive for adopting preventative safety measures. How mergers and acquisitions are reshaping the market. Another big shift in 2025 is the wave of mergers and acquisitions in the insurance industry, particularly in brokerage firms. As private equity-backed firms buy out smaller brokers, manufacturers need to be aware that their broker relationships and policy options may change. Larger brokerage firms can offer better carrier access, but they may also focus more on large clients, potentially making it harder for small and mid-sized manufacturers to secure customized coverage. Risk management strategies for manufacturers. With costs rising and risks becoming more complex, manufacturers need to take a proactive approach to insurance. Here are a few strategies. Invest in predictive maintenance. AI-driven monitoring can help prevent costly breakdowns. Strengthen supply chain oversight. Insurers reward businesses that have diverse supplier networks to reduce reliance on a single source. Improve product safety compliance. Keeping detailed documentation on quality control and regulatory compliance can lead to better insurance terms. Final thoughts. The manufacturing insurance market in 2025 is evolving rapidly, with a greater focus on customized coverage, risk management, and technology-driven underwriting. While costs are rising, businesses that embrace innovation and proactive safety measures will be best positioned to secure better coverage and control expenses. If you found this helpful, don't forget to like, subscribe, and stay tuned for more insights into the evolving world of insurance. See you next time.